Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday post-CPI market webcast. So I wanted to wait until CPI came out before I did this, just so we can get, we can talk a little bit about where it had been and what it had done. You can see yesterday we took out the 50-day exponential moving average. That's the red line. We traded as low as 44.08 post-CPI, but we've held the 50. We're below a number of stuff on the daily. They took it up to 44.30 half before the number. You've got proprietary moving average up at 25 half. Volume weighted average price basically 21. Hourly mid band is 16 half. So they've been kind of battling over that. It's a nice little, once they figured out 23 after the number came out, it was a nice little short there. Now they're trying to convert hourly mid band. We're long against that. So, we'll see. We'll see what it wants to do. It's going to be whippy. It's going to be choppy. It's going to be very two-sided this morning, whatever happens between now and the regular open. So it's about 8:50 in the morning as I'm doing this. Let's do the hourly chart. Okay, so what you see here on the hourly, and I mentioned in the blog, is just a series of compressions and expansions in favor of the bulls. Not being able to convert the hourly midband post CPI, if you take out that 30 half, it's going to embolden the bulls to start to reach up towards 44.50, 44.60, 44.70, and deal with some of the prices that we saw mid-September from the original breakdown that went as low as 42.35. We remain above hourly midband, and as long as we're above hourly midband, the bears are guilty until proven innocent. They're great for a trade. Just did one of those. They are great for a trade, but they are not good for anything overnight or anything that's really going to commit or extend price. And again, you can be long these moves, you can stand aside on these moves, but fighting them short is a big problem. We stood aside for the vast majority of the afternoon yesterday, let it lift. We were short and we let it lift all the way to 99 before we got in, because at that point it had taken out some potential areas of resistance. But we covered the short and then we didn't immediately flip, just because I was kind of curious to see if it had any meaningful legs on the upside, and not trying to throw a dart at the exact low. When you're trying to throw a dart at exact highs or exact lows, the chances of being caught in something very early, and then you have the tendency to want to add and do other things, it's massive. You were better off letting something come in, letting it convert some areas, and then going ahead and getting involved at a level where your risk is really well defined. And if it works, it's going to work great. And we end up in a no heat long. I mean, we held 2/3 of it into Globex, grabbed 20, and then grabbed 20 on the runner. We got stopped out right after the 8:30 number. I let 20 of it ride with a 19 stop, just because what if the initial reaction was to really jam it to the upside? It wasn't. The initial reaction was to stop me out, but that's fine. My point is, you don't have to be picking exact highs and lows in order to do well in this tape. You just have to be flexible and understand what the tape wants to do. For example, if this tape right now cannot take out that blue line and convert it into resistance, over the course of the day, the longs are going to prevail. The bears are going to have tremendous problems. We will go back to 30 and change. But when they ring that bell at 9:30, be ready for a lot of whip and a lot of chop. Okay, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll be out with a closing wrap-up after 4 o'clock. Subscribers will have another webcast tonight. All right, take care. Talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.